Hello, everyone. So for today, we'll discuss more on learning price in technical analysis. See, price is the most important element in a chart, and it's impossible to trade without having knowledge or awareness of price action. All other all other things that you see in your chart are really of secondary importance. Here in technical analysis, price generally discounts everything, and that the past and future are already factored in it. Okay, now let's turn our attention to below chart, which some people would call it a version chart, meaning it's got no volume, no moving averages, no technical indicators and whatnot, just pure clean price action. Okay, um, price action, price movement. Some people are sometimes also used to putting all sorts of indicators in a chart such as this, that they sometimes miss out on the most basic and perhaps the most important component, which is price action. And since price is the most important element in a chart, it should occupy an ample space, I would say, in your chart so you can see it clearly. No, probably my suggestion would be to maintain around a couple of indicators at the bottom of the price chart, and that would suffice. And then we have the candlesticks, another topic that we will discuss shortly here. Okay, let me zoom in a bit if it's not visible. Okay, it's the same. Okay, prices in charts are most commonly represented by candlesticks. And for this video, we'll focus on the form of these candlesticks. We'll find that there may be a story behind each candlestick form, and we have to be able to interpret them correctly in order to have some foresight on what could happen next. So we go next to looking into the anatomy of the candlesticks. Here are some examples actually on the right side. Okay, a candlestick has but two parts. So it has a body, which is the solid colored portion of the candle, and it also has a tail. So this is the body, for example, and this is the tail or wick, which are thin lines on the ends of the candle. This is a wick, this is a wick, and this is a body, full body. Now it's impossible for a it's possible for a candlestick to have no tail or no body at all, and that's what we will cover later on as this video progresses. Okay, the color of the body generally determines if the stock has traded up. For example, if it has traded up, it's green. If it's traded down, it's red for the day. By the way, um, for today, let us assume we are using the daily chart as our time frame. And sometimes it can appear white or black, respectively, depending on which tool you are using. In a daily chart, a single candle summarizes an entire trading day. And you really have to pay attention to four important areas or points in a candle. So we have the open, high, low, and close. Okay, so what is this open, high, low, and close? Okay, starting off with the first one, we have the high. It is the highest price of the day. It is usually represented by the upper tail of the candle. And if there's no tail, then the topmost part of the body, which is the high. Now the low, this is the lowest price of the day. It is usually represented by the lower tail of the candle. And if there is no tail, then the bottom part of the body is the low. And then we have the open. So what is the open? It's the first price traded in a day. So for example, here we have a green candle here, and the first price trades, it being a green, The first price trades here on this level. Okay, and then we have lastly the close, which is the last price traded in the day. The close is really the most important part of the candle and is the most important price of the day. The difference between the open and the close is called range and is represented by the body of the candle. A green candle, as such as this one, means that the stock opened at a lower price, which is bullish, and then a red candle means that the stock opened at a higher price on this level but was sold down at the close, which is bearish. Okay? If the stock, however, if the stock closed at the same time that it opened, then the candle has no body at all and is called a doji. We'll cover it again later on. Okay, for additional information, no, a stock is valued not by its open or its high or low, but rather by its close. Okay, after market hours and until the next trading day, what people talk about is really the closing price. And even the media, no, the media reports stock prices based on the close. We have the traders, the investors, institutions, and whatnot that make overnight decisions based on the close. And that's how important it is. The opening hour is also known as the amateur hour because novice traders usually tend to trade during this very volatile period right after the market opens at 9:30 a.m. And that closing hour um, is also known as the professional hour. Why? Because professional traders and institutions decide at the close. Okay, so later on we have a question here: how to go about some basic candlestick formations. Now, we suggest to take note of the color, the size of the body, as you see here on screen, the height of the candle, and the locations of the open, high, low, and close. So starting from the left, we have a green, tall, solid body, no tail. Okay, this is the most bullish candle. Price opened at the low here, but was bought up and closed at the high. The buying conviction is very strong. That's what it means. And it also means demand is very strong. A bullish follow through may be expected on the next candle. Next up, we have this red candle. It's also tall, solid body. It's got no tail. And this is the most bearish candle. This is a scenario where the opening price was high, started here, but was subsequently sold down and close to the low. The selling conviction here is really very strong. And more likely, a bearish follow through may be anticipated on the next candle. So moving on to the third one, we have green candle. It's also tall and it's got a short body and it's got a long tail. Uh, this is what we classify also as a very bullish candle. This is a scenario where price opened high, but the sellers tried to push it down within the day. But they did not succeed though because the buyers then rushed in and closed the price near the high. Now, let's turn our focus on the tail. So we call this a buying tail because it shows you how the buyers supported the price at the area. So the attempt really to push the price down was rejected at the area of the tail. Now up next, we have this red, another red, tall, short body. And then we have also a long tail on the reverse position. Okay, this is a very bearish candle where the price opened low and tried to move up but was pushed back down. Okay, it was it it started right here, around here, and try to move up and push back down. And at the end of the day, it's the sellers who won, leaving a long selling tail. What does that mean? The area of the tail here is the area of resistance for the supply, slash the sellers, is heavier than the demand. So what we refer also to as the buyers. Now, lastly, we have this image on the right most part. It's got no color, no body, tall. It can be tall, it can be short. It looks like a cross. So this is a doji, and this is an indecisive candle, meaning it's neither bullish nor bearish. So this one closed on the same price where it opened. It has no body, that's why it has no color. And depending on its position on the chart, the doji can be meaningless in non-trending price action, no? Or it can be a meaningful sign of reversal in trending charts. And for me, there's really no need to memorize each and every candlestick structure. We just have to stick to a few ideas in interpretation. So what are those? Okay, first, we look at the color. Color determines the bullishness or bearishness. As long as it's green or white, it can be green or white, it's bullish. Similarly, if it's red or black, it would be bearish. Now, second, we look at the size. Size of the body, it determines the strength. The longer the green candle's body, the more bullish it is. Okay, and similarly, the longer the red candle's body, the more bearish it is. Okay. Um, Now, lastly, we have the location of the close. Location of the close in the candle, it sets also the interpretation. No, the closer the close is to the high, the more bullish it is, and the closer the close is to the low, the more bearish it is. See, as you see on the third example here and fourth, respectively. Okay, now this covers our topic for today. There you have it, darling friends. If you enjoyed this video and you'd like to see similar videos in the future, perhaps you have some comments or questions more, don't forget to like, comment, and subscribe to my YouTube channel down below, and hit the notification bell as well. Thank you.